Afternoon, we're looking at the S&P, and again, yesterday we had a really whippy day. The market went up 36.45. Now, the weekly pivot point analysis between the weekly R1 and R2 is what we call the midpoint line. And the midpoint line from this, as you can see, because I've posted it onto the group, the midpoint line was at 36.44. So when markets have nothing else to go for, these projected pivot points taken on mathematical calculations from the previous week's action really do hold a lot of value. The reason they hold a lot of value is because guys in the trading, I'd say in the trading pit, that was nearly an error on my part, guys in the trading rooms are looking at, okay, if it breaks X, where's it going? So when it broke X, which in this case was 35.88, which was the all-time high, where was the next big level it was going to go to? So you look for the R1, the R2, and the midpoint line. It went to the midpoint line between R1 and R2 and failed. Now this morning we're 100 points lower than where we were yesterday. So we're at 35.39. So we look at, there is this buy the rumour, sell the fact. Doesn't help if you're short before the rumour comes out, I have to tell you. But when it's all taken into consideration and everybody sort of chewed it over, mulled it over, that's what really pushed the market down. I don't think the news was as brilliant as what they were anticipating. In saying that, it has had a big knock-on effect to the Nasdaq, which I will quickly show you now. Now you can see with the Nasdaq, we didn't take out the all-time high. The all-time high up here is 12,439. So I can actually put that onto the chart so you can see it. There you go. Okay, you can see it up here, 12,439. We didn't. Now, I know the Nasdaq had, very narrow trading ranges, but you could see that it didn't quite reach that point, didn't quite reach that. Up it went yesterday, touched our trend line and puked. Reason being, it's always a reasoning behind traders. Now, we're not open on the Nas yet, but we are already over 100 points lower. We are actually 177 points lower. We're currently traded on the Nasdaq at 11,675. Ouch. So we are down just around this little glut here. So we filled the gap, obviously, yesterday. Now, there are reasons for this, and I will try to explain. Traders, we are simple folk, really. We like to make out that we know an awful lot about the intricacies of markets, when in effect, we don't really know too much about them at all. We look at levels and we use a bit of common sense. And the common sense is this. If there is a first and foremost, why has the Nasdaq gone skyrocketing? Okay, once you come to that conclusion, Zoom, Amazon, online shopping, whatever, all these things coming to Netflix, we all like a bit of Netflix, all these things in the technology stocks, somebody's gone, well, hang on a minute. Remember, we're trading these in the futures as well. Hang on a minute. If we've got this vaccine that should be ready by the end of December, I beg to differ, or at least middle of next year, again, I beg to differ. But as I said, we are simple people, traders. So the knee-jerk reaction of the Nasdaq would be, we don't need these technology stuff anymore. We're all going back to work. That is it in a nutshell. So bosh, down goes the Nasdaq. It's that simple. So that's why the thing's off 177 points from last night's close, and why yesterday it didn't do a great deal on the top side in comparison to the rest of the markets. So if we do take out this 11,520, which, the way the Nasdaq's running at the moment, we could well do, the Nas could actually start to come back down to this area here, just above the 11,000. Now, we're still in an uptrend at the minute, but we have got big red flags. One, that day when it went up close at the high and couldn't sustain it, down we puked, up we goes again, can't sustain it, down we go, up we go again, and by any person's imagination, that is a reversal day. Whether it's a key reversal day, in proper charting terms, it is. However, when you've had 2 days of it doing nothing, one, that alerts you to the fact that why is it doing nothing? And two, you know, it gapped up so much last week, but here is where it stopped. It didn't have the same characteristics as what the S&P had. So there is your little key. Always look to the Nasdaq for a bit of general direction. But this is purely fundamental, this one. It is. People's sentiment is we won't need Zoom for much longer. So, sell the Nasdaq. So we'll just take a quick look at the Dow. Now the Dow did make a new all-time high. And a new all-time high is 29,839. Bear that in mind. Okay? Again, put in your weekly pivot points and your daily pivot points because they really do work when we go into all-time highs on markets. We have a gap in the Dow. If you look down, that is coming in at 28953 and the bigger one is coming in at 28480. And the Dow is up 148 points at 29300. So we're actually up on where we closed last night. As I say, we're trading out 29300. Again, it's not a difficult process. Okay, we've got a vaccine. Back goes industry. You know, it really is that simple. Buy the industrial stocks, sell the technology stocks. You know, it could all change tomorrow. It could all change by the end of the week when they come out and say, do you know what? We forgot to mention that the vaccine's really good, but it's got to be stored at -80. So, you know, how are we going to get it all to you apart from being stored in liquid nitrogen? All sort of little things like that. This is the sort of vaccine you can keep in a fridge. And we all know FIFA is, how can I put it? It's had bad press, the old FIFA company. It's had bad press because it's had that many lawsuits shoved at it, and this is all on record, that even if I told you 20% of the bad things that FIFA's done, you would find it hard to contemplate. However, so me, I'm not holding my breath for, you know, this isn't, the world has been saved. This isn't the type of thing that I really do. I take this with a bit of a pinch of salt. I'm not too keen on FIFA as a company, only because you know, I'm not great with pharma companies anyway, but this particular one isn't too great. And Johnson & Johnson's vaccine has been closed down in the US and has now opened up in Brazil. I'm not saying they don't like the Brazilians. All I'm saying is, if it was that good, I'm sure whoever won the presidential race would want to keep it for themselves and not send it off to Brazil. So, pinch of salt, but these things are going to make the market move. So you've got to be prepared for this. We are going to have major moves in each direction as time goes on, because the alternative is we are locked down until we do have a vaccine. End of story. Because you can lock it down, but once you start to move around, it will then come back and bite you in the arse again. So this is why we've got to be really careful when trading these markets, because they are going to be horrible to trade. We need to be one step ahead of them. Let's see what the Dow does when it does open. Let's see if we can get it back above the yearly high, which happened yesterday. If not, it's going to come down. It is going to fill that gap. The market is overextended and has been overextended since it bounced off its 200-day moving average. Did I think I'd see it making a new all-time high this week? No, not really. But it did look like it wanted to go higher. As I say, it wouldn't be up here if that news hadn't been released yesterday. Okay, I think I've bored you all to death now. Good luck, and I will catch you all later on the desk.